shifting your mindset to more of an abundance mindset of I will always have the ability to earn more money, or can I take on a side hustle that can fund some of my investment portfolio, I think is usually the first step that I work with when it comes to meeting with people, because I think money is this thing that's so fearful for people, whether it's how they were brought up or experiences they've had in their life. Most people feel like there will never be enough. So shifting that mindset is number one.
Hey guys, let me tell you about Folio Lands. We landlords fear complaining tenants, fast turnover, bad reviews and negative ROI. Over the years I realized it happens because we lack a system. They streamline maintenance and repair requests by inviting our co-investors and repairmen into the app to foster smooth communications between us, the tenants and the suppliers. Head over to foliolens.com if you hate time-consuming admin tasks like tracking your property revenues, expenses, and due dates. So sign up for their newsletter at foliolens.com and start managing your rental properties from anywhere in the world. Hello and welcome to the Ideal Investor Show. My name is Axel, as always, and today we have the great honor and privilege to have Janine Rogan with us. And I said before we started the show recording that Janine is a little famous already. She has the Wealth Academy, she's been on TEDx, she's YouTube channel, she's a CPA, she does it all, and she's a mom recently. So welcome, Janine. Maybe you tell our audience a little bit who you are, where you're coming from, what you're typically doing, those kind of things.
Yeah, thank you so much for that introduction. I'm based out of Calgary, Alberta, Canada, which is, as I was saying just before we hit record, right above Montana. And I am the founder of the Wealth Building Academy, which is a personal finance company that aims to educate and empower women to own their financial future. And I've created an investing course for really anyone. It's called the Wealth Lab. So usually I'm busy working on that. As well, I do a lot of speaking to numerous organizations across the country. And when I'm not doing all of those things, I'm taking care of a 10-month-old.
Yeah, wonderful. That's very good. Maybe diving into that lab, and you said you're trying to help women with their financials and their money. And that's kind of like where Nadine, our awesome executive assistant, found that alignment, because as our audience knows, I'm mentoring people who want to get into real estate investing to generate passive income and ultimately reach what we call the time freedom point, where you no longer have to exchange time for money and can do the things you're passionate about, which could be your job, but maybe you might want to do only half of your job or no longer your job and do something else. Can you describe a little bit what's in the lab and what your clients, women from all over, and I'm assuming men can look at it too, what it's focusing on, what it's trying to overcome? What are some of the things that you have found that really need to be addressed?
Yeah, and it is obviously open to both men and women. I target women because I find that women in general have less involvement in their finances. And I think that, as women come into more wealth and we're closing the wage gap and the wealth gap, we're going to see more women stepping into their finances, or perhaps they end up in a situation where they have death of a spouse or a divorce and they're needing to know those things. So I think it's really important for both men and women to take a hold of their financial future and make sure that they are investing, whether that's in the stock market or whether that's real estate investing, so that you can generate that passive income. So in the Wealth Lab, there are 6 modules and 39 lessons that go through pretty much everything from, how to start investing, what is a stock, what is a bond, what are dividends, all the way through to how to, invest socially consciously, as well as executing that first trade and building a portfolio that is going to grow and pay you dividends year after year.
Okay, yeah, that's very good. And so far we haven't touched on it, but when I first did a little research to see, what can I learn about Janine, I found that you're also a CPA or have an accounting background. And I often, and I really mean this in a joking way, have been saying that accounting and tax preparers and stuff are basically, in a sense, historians, because they take all the stuff that has happened in the past, whether that past is the last quarter or the last year or typically something along those lines, and bring it in the right form so it can be submitted, but it can also be in the process of submission and hopefully a little bit in a strategy way before that, analyzed and optimized so that what we do with the money is smart in a sense, right? So with that, I think it's not that frequent, not that often, at least I haven't come across it very often, that somebody comes from this kind of preparing and putting it in the right form of the things that have already happened, building the bridge to how can we behave better. Could you share a few things that you have seen, especially from an investing perspective, where you would say, yeah, I see this over and over and over that people are struggling with that?
Yeah, so I don't actually do a ton of the preparing work anymore. That was definitely in my previous life. I'm definitely more in the finance and the tech world now, but I still do know how to do accounting. It is kind of what I did my university degree in. I did my designation, so definitely still near and dear to my heart. When we look kind of back at what people do when it comes to investing, I think one of the mistakes that people make often is trying to time the market. So you see a stock or you see the index jump up and you're thinking, oh my gosh, I got to get in on this. And people respond emotionally to that, and vice versa. When things start to go down, people tend to panic sell. And that usually ends up, when we look back at things and we analyze performance, we see that it's those emotional decisions that end up not being very favorable when it comes to looking at your returns.
Yeah, absolutely. I can actually attest to that. Not so much from the real estate perspective, but I know, for example, a couple of friends of mine who totally saw that digitizing books and having books and stuff like that in a digitized format and buying and having them delivered to your home would be a smart idea. So they got very early on into Amazon. When you look at the Amazon stock development, there was a little bit of an uptick in the early stages, like when shortly after they went public. And then it came down again and it stayed there for a long time because the market was always saying, well, they're making no profit, they're making no profit, they're making no profit. Now, I think there is a little bit, if you go in the history and say, okay, well, why was that? Because that was typical. Everybody was expecting, if you had a new IPO, that they were supposed to be profitable companies. And if for a series of quarters and years they weren't, then they were constantly hammered on that. But then people either got tired of it or they had that little uptick and thought, oh, that was great. Now that they're going down, just like you said, they sold again. But they never got those 3, 4, 5,000%. And I know several people, myself included. I'm not a stock investor, but I'm technology interested. And so I wish I would have been smarter with Tesla, for example, to get into that, because I still believe that there's huge upside potential in the future. But if you say, okay, I could have gotten in at 10 or at 50 or even $100, and now look at it, it's $800 a share, right? That's, I think, another thing that is kind of in a sense related to the real estate investing world, where a certain component of discipline and patience is required. So can you tell us a little bit how you get that across for the women or people who take your lab program or in general work with the academy? Because for me, I always feel it's a matter of you need to change basically the thinking, right? So what does Janine do when she addresses that issue?
So one thing I actually want to just go back to really quickly about what's super interesting about Amazon and them not having a profit for a long time, and a lot of tech companies have this. When you actually look at the financials of, and this is where the accounting nerd in me comes in, when you actually look at the financials for these companies, you can see that in a lot of instances, these are losses that are, I guess, manufactured or created by the executives. When you look at all of the deductions that they're taking for tax purposes, or the actual income that they have when you back out all of these depreciation expenses or amortization, things that are like not real expenses, you actually may see them in a profitable position. And so that could be an indicator that going forward, they kind of have a little bit of a control over whether or not they are posting a profit.
Yeah, absolutely. And before we get back to that previous question, I would totally agree with that. The other aspect of that is also, business building. I would assume you would agree, right? Because it's, amortizations and other expenses and so forth. But I think it's also a pretty common theme, at least in the beginning stages, that pretty much anything that comes in from a revenue perspective gets reinvested in some way.
Yeah,
so it's not
absolutely.
not just deductions and stuff like that, that. But if you say, okay, well, there is this weird little company that wants to sell books online, well, look at what became of it, right? Like not just AWS and all the other services, but especially the pandemic, I think, has shown, there's almost nothing anymore that you can get there. But it started with an idea of selling books online. Or if you look at other companies like Netflix, they now recently, I saw some advertisements where they said, don't ever give up. We started with mailing DVDs.
I saw that too on LinkedIn.
And
I paused and I thought, look how far this company has come.
Yeah, and I'm so old, I got some of those DVDs.
Oh.
Yeah. No, but it's true, right? So back to the point, you're absolutely right. I think it's very important. And this is also an aspect, right? When people come to ask me, okay, with this real estate investing, I'm supposed to spend $120,000. That's how oftentimes people look at it, or $150,000. And then you're telling me I can expect to get $250 a month as positive cash flow. And I say, yeah, that's true. But when you really look at the big picture, it's not just those $250. And people naturally always say, okay, well, if the house is $150,000, then it's their money. Especially, and I want to say this because, maybe we share ultimately when this episode comes out with both of our communities. And a lot of my Canadian colleagues and friends have pointed out that oftentimes the myth seems to exist that if you say, well, the United States real estate market in certain areas is still more affordable than Canada, I would like to do it, but I've been told I can only buy this in cash. I have to put the whole amount of money on the table, which in our system, we have partners where we actually have the opportunity for non-citizens and non-permanent residents, card holders, to get financing, not just Canadians, but other people from other countries.
Oh, that's interesting.
I just helped a client who is originally from Germany, lives in the UK, and bought a property in Ohio here in the States. So we have established that. But the interesting thing is these $200 is not everything, right? You mentioned deductions that apply from a tax code perspective. Then there is typically 20 or 25% down payment. So it's a different story if you make $200 on $30,000 or $200 on $150,000, right? So
totally.
All these kind of aspects play a big role. So getting, and I've actually written, and for anybody that listens today and hasn't done it yet, I always invite everybody to say, go to ideawestgoer.com and download the free mindset menu, because a lot of it has to do, how do I get my mind in the right frame? How do I really understand that I'm creating my future with the help of the Janines and the Axels of the world? So I would like to come back to that question. When you start working with the folks that come in touch with you through the lab or through the academy, what kind of engagement do you do with them to get those things, those ducks properly in the row for them to be as successful as possible?
Yeah, absolutely. And I think there's a couple of things there. So mindset is so important. When we're looking at a wealth building mindset, we want to make sure that we are not taking on a scarcity mindset of there will never be enough. I'm spending all this money. What if I lose it all? And I'm not saying, be risky and put all your money in crypto and hope it goes well. But when you have a well thought out investment strategy, whether that's in real estate or the stock market, I don't think in many situations you're going to see it go to zero. Like if the stock market in its entirety went to zero tomorrow, we would have a lot bigger problems in our society than your $10,000 investment, right? We'd be back to the barter system. People would have no money. Money would be not valuable. All of these companies would have collapsed. So, having that type of a mindset is really important to move away from when you're looking at building wealth. So, shifting your mindset to more of an abundance mindset of, I will always have the ability to earn more money, or can I take on a side hustle that can fund some of my investment portfolio, I think is usually the first step that I work with when it comes to meeting with people, because I think money is this thing that's so fearful for people, whether it's how they were brought up or experiences they've had in their life. Most people feel like there will never be enough. So shifting that mindset is number one. And then I would say the next most important thing is to get started as early as possible. So whether that is starting with a mutual fund or an ETF and you're investing $25, that's what I started with. It makes all of the difference over the long term. If you can can start with $25 and do that every month and then be invested for 10 years longer than you would have if you waited to save $10,000, you're going to find that you're going to be able to reap the rewards of the market, whether, again, you're in real estate investing or the traditional stock market. Like, look at what happened with housing prices in the last few years up here in Canada. It's absolutely going insane. I read an article today that the average price of a home in Toronto is over $1 million. So if you had gotten in 5 years ago and started to generate some cash flow on that, you would have, more capital in the market and you would just be ahead as opposed to waiting to start. So I think the second piece of advice I always give people is get started as soon as possible so that you can reap the rewards of, dividends or investment income or whatever it happens to be in your portfolio.
Yeah, absolutely. And thank you for pointing that out. That is great advice for our audience and for anybody who we both can touch with our experience and in our education. I've changed a little bit the term, and because I think it could be or has been somewhat misleading and doesn't really apply anymore. And I call it now compounding assets, right? In the past, it was called compounding interest, but it's hard to argue when interest rates are 0.2% or something like that.
They're so low right now.
Right. Yeah. I actually looked it up because, mathematics, and especially for somebody with your background, you probably have been very fascinated about it. Even if you were to assume that you're going to easily make it to 100 at 0.1%, or 2, you don't even double your money if you hold out 100 years. But if you say compounding assets, right? And for those listeners and viewers, Janine is totally right to say, you want to do something, start as early as possible with small incremental amounts of money. And for anybody who is listening and saying, well, okay, I can see this with an ETF or with a mutual fund or stuff like that. As we look into technology, there's also the awareness that people have come to say, we want to get away from this notion that investing and wealth building is only for people who are already born with a certain amount of money or wealth, kind of silver spoon scenario, or for some kind of lucky circumstance gotten early on into money. And they're working on all kinds of different ways on how can we get away from that myth. And so since I'm more on the real estate side, I want to make people aware there is, for example, something called Lofty AI, the loft, kind of like in the ceiling loft kind of word, Lofty AI. And what they're basically doing there is a different form of the term syndication. And I don't want to go too far, but syndication normally means you have a certain amount of money, people put that together in a bucket, and then they buy like an apartment complex. Well, if you take this down to a much lower level and say, how about if I take a $150,000 property as a rental property and I make it in tokens? Now, this goes a little bit in the crypto world, but tokens is in a sense similar to a chip in the casino. And I make 3,000 tokens at $50 each. Then Janine and Axel and anybody listening or watching us can buy literally 1 token a month and have 1 token, meaning $50 ownership of that property through Lofty AI, right? And then when you say, okay, so now I've done this for a while and maybe I put in my chips and get a little bit more money out. If you have $1,000, $2,000, $5,000, you can go to Fundrise or peer-to-peer and become an owner of a little bit bigger chunk in a little bit bigger property, ultimately to get to your initial first down payment of a property where the $150,000 property at 20% financing would be about $30,000. So over time, and it isn't necessarily a very long period of time, you can start. And I think these hurdles that sometimes are being put in place are somewhat mythical and artificial to say, well, I have to have a significant chunk already, however I'm supposed to get that to get started. And
totally.
I'm really glad that you brought that up. So when we take that and have debunked that myth, are there any other things, especially when you're working with women, that you see that you're working and getting into pretty early on to help them to get on the right path, on the right journey?
Yeah, I would say for women specifically, I think it's being involved in those financial decisions. I think a lot of times, and whether this is just societal, I'm not 100% sure. I think it's a lot of things that go into it, but in general, women, and this is a very broad general statement, women tend to let if they're in a heterosexual relationship, men manage and invest the money. And usually because, again, I guess the financial advisors in general are male that people are working with, I think women feel scared to ask questions. I think they feel talked down to when they're talking to some of these gentlemen that have been in the industry for so long and are using, financial jargon that most people don't understand. There's a lot of words that are confusing when it comes to, starting to invest, or mortgages a little bit less so. Most people understand what a mortgage and a down payment is, but there are terms in some of those mortgage agreements that are challenging. So I would say building up confidence is a big piece of what I do with women as well. And so for anyone that's listening, I would encourage you, if you're a man, to make sure that you are having those conversations with your significant other and taking it as an education piece for both of you to learn. And if you're a woman, ask those questions or find a financial advisor that you feel comfortable talking to. It doesn't necessarily have to be a woman, but find someone who's really willing to listen to you and work with you and make sure that everything makes sense. Because I think so often, and this applies to both men and women, people get into things that they're maybe investing in that they don't necessarily understand. And that can be really problematic down the road. If something goes wrong and you don't understand what you're invested in, or your advisor isn't really in line with your long-term goals, that can be a huge problem when it comes to wanting to retire. You might think that you have a certain amount of money and assets, but you actually don't. So I would say those are probably some of the more specific areas I work with women on.
Yeah, absolutely. And I thank you for pointing those out. I can totally say I've seen the same thing, men or women. Actually, I go one step further in a sense to say, just because it sometimes appears if men know what it means, they are at least as prone to not be willing to ask the question, because they always, that makes them look dumb or something like that. But they put on a pretty good game, and the whole culture and industry is kind of supporting that. I can say this, and we actually took it upon ourselves in our Idea Wealth Grower approach on our YouTube channel to say, I'm literally every week post one video called Terminology Explained. And this is terminology in the context of real estate. But the aspect that you're pointing out, I think, is so important, is that you need energy. And I always say you need positive energy to stay motivated on the journey towards a goal. Mm-hmm. And the issue, and I wonder if you face this with the folks that you work with and that you educate as well, but what we are facing oftentimes is that there is so much different stuff, and different organizations start YouTube advertising campaigns and Google campaigns and all kinds of campaigns. So for a while you hear about real estate investing, then you hear about stock investing, then you hear about cryptocurrencies, then you hear about mutual and so forth, which ultimately I find oftentimes leads to a situation where people say, I don't really even know where to start anymore. Yeah. And if I find a person who sounds convincing, then I'm trying to follow that person while all this other chatter is still inundating. Yeah. And so there's a lot of jumping around, and I always find it's important, and that's what we do, and I would be curious how you go about this, to first say, let's really identify what you would like your future to look like and to feel like, and put that in a vision and put that into a goal. And when we have done that, then we can actually take a look and say, what is a safe and exciting path to get to that goal? And sometimes the answer might be what I'm suggesting, this could work with real estate in this particular way. But if people are younger and say, okay, well, I also want to have some early successes and not necessarily have to wait 8 to 10 years, then it might need a combination where we would say, hey, let's get in touch with Janine and work on it together, because she is a little bit more in the stock markets and maybe some crypto and some kind of quicker things, where real estate is always a little bit of a patience game, which pays off in the long run, but maybe you need a little bit of positive injections every so often and some wins. So how do you balance that people get this inundation of information nowadays? You hear something, you put it in Google, and you get 100 different things that you're supposed to be knowledgeable about and follow and do and what have you.
Mm-hmm. Yeah, there's almost too much information out there. And I think you have to be careful about where you're taking that information in from. So one of the biggest things I tell people is understand how someone is getting compensated. So whether that's your realtor, if you're buying a property, or your mortgage broker,
Right.
or you walk into a bank and you want to buy some ETFs or mutual funds, if you understand how they're paid, you can understand where that bias is sitting. And it's not to say that you can't use them. It's just if you understand how they're being paid and where their bias is, you're more aware of where you might need to be careful. So for example, if you were to use a financial planner, you would want to make sure that you're using a fee for service financial planner as opposed to someone who takes a percentage of a fund, because then they would be more inclined to sell you a more expensive fund because they're going to get more money. So understanding those things, I think, is really important when you're trying to whittle down who you take advice from. I think when you're looking online and you're looking for, people that have done it, what works for someone may not work for you. So I think it is important, if you're really overwhelmed, to speak to someone who is a professional in this space and knows what they're doing, as opposed to and there's nothing wrong with personal finance bloggers, but I think sometimes there's some tricky things that may need to be taken into account in those situations as well, like tax situations or, cross-border situations. If you're looking at purchasing real estate, you don't want to just take someone's advice that you've never met, you've never spoken to. And I would say the last thing is interview the people that you're going to be working with, because if you don't feel comfortable with that person, then it's not going to be a good fit long term. So really just getting to know them, asking them questions, and kind of going with your gut on that as well.
Yeah, absolutely. That's great advice. Thank you for sharing that, Janine. And to piggyback on that, I think there are a couple additional things, and I wonder you might actually agree with them. I find, especially in the real estate world, but I've seen it in other areas of investing and wealth building as well, is in that interview process to actually establish, is the person that you're talking to really the person that is actually working on your behalf and on your account? Because I found it so often, especially in the stock market thing, there are people who basically sell the service, but they're not really doing anything. Or even if they are, and like you said perfectly, I'm really, really glad for our audience that you brought that up. If they are in a percentage incentivized, percentage doesn't mean on the gain of the mutual fund, it means on the number of transactions, right? So, which is actually really stupid if you say, okay, well, they basically get more money if they sell and trade your money back and forth more and more often, every time incurring a fee for them, but not for you. It just punishes your opportunity to profit. The other aspect that I find interesting is, besides the question, are you actually working on it, is have you actually done what you're preaching? When people come to me and say, okay, well, you're saying that you're preferring the residential real estate investing strategy in high performing areas working with turnkey provider. And if they were to say, well, are you doing this or have you done this? I would say, yeah, I have currently 10 properties. I just signed a contract on number 11. And I am happy to introduce you to the exact same people that I'm working with, which is actually for anybody who wants to work with us, or I'm sure it's the same with you, Janine. Somebody wants to work with you and you introduce him to some of your partners, it immediately establishes a different relationship than to say, yeah, I'm part of XYZ company, huge, big provider. Everybody is anonymous. You don't ever really know. And at the end of the day, or end of the month, you get a statement, but you don't know how that came together or what it even really means other than looking at the numbers, right? I think these aspects to establish what's your experience and are you actually doing what you're preaching, two additional things besides interviewing to really make...
Those are such important questions. I would definitely encourage anyone to ask those questions when they're looking at working with someone in the finance field, because so often, like you said, you get your statement at the end of the month, and the person that you originally spoke to is not the name on the statement that's doing all of the actual trading. So that's definitely something to be careful of. And again, I think, really looking at what those people actually, if they're doing what they're saying, I don't ever recommend or say like, you should buy this stock. I can't give that advice, but I openly share in my course, all the things that I am invested in, so that people can look and do their own research and see if it's the right fit for them. And then I would explain why I'm invested in some of those things. Maybe it's my age, maybe it's the sector I'm interested in, and if they align with those values, then maybe it's a good investment for them. But I think you hit on two really, really important things, and I would encourage people to definitely ask those questions.
Awesome. Yeah, thank you for confirming confirming that, Janine. So as we get towards the end of the show, we always have a few questions that we try to ask everybody. It doesn't always work out that way. So I have two that I think would be great if I can ask those.
Sure, yeah.
One is there anybody that you specifically admire, and can you tell us why?
Oh man, there's so many people I admire. That's such a hard one. I would say, I don't know if I can pick one off the top of my head. There are some really amazing women in Canada doing some really great things in the finance world. So someone like Michelle Romanov, who is a dragon on Dragon's Den, she's Canadian. I think she's doing some amazing stuff. I mean, obviously people like, Michelle Obama or Malala, who are doing things across the globe to further women in their endeavors, I think are really important.
Yeah, that's awesome choices. Yeah, Malala is actually, for those listeners who don't know the name, is an Afghanistan woman who got attacked during a bus ride school and made that her mission to advocate for women.
Yeah.
And
I saw her speak once, and that was amazing.
Yeah, she, for her age, unbelievable. And Dragon's Den, for those people who are not that familiar, is basically the Canadian version of Shark Tank. So, and
yes,
you can see that I'm really into this stuff. So there is actually a German version called Die Höhle der Löwen, which is the Lion's Den.
Oh, okay.
You guys have the Dragon's Den, and the Americans have Shark Tank. So
yeah. So all the creatures
cool.
of the world are being represented.
So I've never really fully, to be honest, and we're getting slightly off track, but if you really say, okay, I'm looking for a partner in my endeavor who helps me financially to become more successful faster, why that is somebody who's trying to eat you and why that is supposed to be encouraging or motivating, I'm not quite sure that the picture is quite right.
Or maybe, I guess, if a shark were to bite you, maybe they're taking a piece of the company. I don't know.
Yeah, if the bite is small enough,
yeah,
right?
If the bite is small.
So the other question, Janine, is if you had a time machine and you could go forward or backward, wherever you want, where would you go and why?
I think probably prior to having a child, I would have said I would go back in time. But I think now, after having our son, I would go forward in time to see, everything that he ends up accomplishing, like past my death and that sounds a little bit morbid, but I would want, as much time as I possibly could have with him. So I'd go forward.
To make it less morbid, we could say when you're a grandma, right? So you don't have to go all the way there, Yeah, okay, I can see. And what would you be most interested? Is there any particular thing or just a big picture?
I think I'll be interested to see what happens with the world climate. Obviously, I just saw an article today that there are forest fires in Canada in October, which for anyone who's listening, it's like 2 degrees in the morning Celsius when we wake up, which is like, I think 32 Fahrenheit. So it's not warm. So there really shouldn't be forest fires. So I think, kind of just seeing what goes on there. And then I would also love to go forward in time to the point in which we close the wage gap and see the equality between men and women. So right now it's 257 years to get there. So I'm hoping by the time my lifetime is over, that gap is a lot smaller. Maybe we'll even get there, but if it's not, I would like to go forward and see that as well.
Yeah, I think we are similar in that sense, even with the age difference, because I'm really curious, for example, if Elon Musk's vision of a secondary place on Mars as an independent outpost, that could be a place where those inequalities wouldn't even start, where they eliminate that right away. And I hope that wouldn't take 250 years right now. I think he wants to still, he has this kind of interesting thing. He says, I want to die on Mars, but not on impact.
Yeah.
So if that's actually achievable, he's 50 now. So I guess if we give him like another 30 years or so, and then to go there, and that would be cool to see if that actually.
That would be cool to see.
Yeah. I think we both on the time machine going forward, however far we need to go. So that is awesome. All right. So great. That was the last question on our 3 questions we asked everybody. For people who hear you in Canada or otherwise and say, wow, this is really interesting, an accomplished woman with both the CPA background and this forward-looking philosophy, how can we get in touch with Janine? How can we get access to the lab and to the academy and those kind of things?
Yeah, so I am on Twitter and Facebook and LinkedIn and Instagram all under the same handle at Janine Rogan. And then my website, thewealthbuildingacademy.com, is where you can find more information about my course. And if you have any questions or you're looking to, book speakers, that's something that I love doing. You can always email me at hello@janinerogan.com.
hello@janinerogan.com. That's a nice email address.
Yes, I like it.
Thank you so much, Janine, and thank you for the wisdom that you have shared and for the good advice, especially for women. I think that's an important thing, and I love to have women come on our show because of that, right? It's much more credible when you say it than me saying it. So thanks again for being here and for making the time. And
yes, well, thank you for having me. It was very fun.
Absolutely. And anybody who wants to reach out, we're going to put the email and those links and stuff like that in the show notes.
Awesome.
Thanks for listening, and I hope you enjoyed today's episode of the Ideal Investor Show. More info and the links we mentioned during the show are in the show notes, or you can go to our website at idealwealthgrower.com and sign up for the Apple Podcast link. And if you like to talk to me, sign up for a strategy call. Hopefully you want to share what you learned with your network and bring more people in. We are really eager to hear your comments. And until next time, be well, stay safe, and ciao.